In this video, we're going to have a look at the price target change update. And more specifically, we're going to go into what are important updates in the first place, how can you actually receive one of these updates, why they're so important to our process as investors, how we can actually use them, and we'll go over some examples of this particular update where a price target has been increased and another example where a price target has been decreased. And then lastly, I'll cover where you can go to do some more due diligence. So for starters, what are important updates? Like, it's pretty much in the name, but they're a brief summary of an important development that has occurred in the underlying business or the stock that it's about. So in this example, we're going to look at price target changes, but it could be other things like earnings reports, insider transactions, dividend updates, and topics like that. So how do you receive one of these updates? Well, thankfully, it's quite simple. All you have to do is have a stock either in your watch list or portfolio, and as soon as it's in either one of those spots, it's automatically eligible to receive these updates. And they'll be displayed either in your dashboard on your feed, or they'll be sent directly to your inbox. So why are they so important? Well, these updates allow us to monitor the stocks we're following, and more importantly, it allows us to remain informed on the fundamentals, right? So it's about topics like when analysts change their price target on a stock, or when a company releases its earnings report, or when insiders are buying or selling shares, and other important topics like that. So the fact that these are important updates delivered straight to us, they allow us to save time during this monitoring and research phase. So we don't have to go through all the company's filings manually. These findings are analyzed and then the update is delivered directly to us, which saves us from doing all that research manually ourselves and consequently saves us a lot of time. So let's have a look today at the price target change update. This update is obviously triggered when the consensus price target is changed. Now, consensus being just it's the average of all the different price targets that are out there from all the analysts that have submitted a price target. So in this case, in this particular example we're going to go into in a second, it has two analysts covering it, and it's the average of their price target. The update includes all the different data here, so we can see the current and previous price target to give us some context around how it's changed, whether it's been positive or negative, how many analysts actually cover the stock, so if it's got heaps of coverage or not, and the discount or premium to the last traded price, so just giving us an indication of if there's any opportunity there or if there may be a risk. We also display the 12-month performance just to show us how the stock has been going over the medium term in the recent past, and also we cover the future EPS estimates of like what the stock is expected to deliver next year, and compared to what the past EPS figure was, to show us if there's like any sort of high growth in earnings per share expected or if there's a bit of deterioration. So let's have a look at this first example. Here we've got an instance where the analysts have increased their price target. So we can see here the price target has increased to $33.25. And this is up from $31 previously, and the current price target is the average from the two analysts covering the stock. The new price target is 15% above the last closing price of $28.93. Interesting, so they think there's still a bit of room left in this particular stock, or some upside. Next, the stock is up 51% over the past year, so it's had an astoundingly good 12-month performance, and analysts seem to believe there's still a little bit left. The two analysts who were covering it seem to believe there's still a little bit left to go. And lastly, the company is forecast to post earnings per share of $2.39 for next year compared to $3.17 last year. Interesting. So its earnings per share are actually expected to decrease quite a bit since the last year, but the stock has performed really well, so that's kind of interesting. I'll show you now where we can go to get some more insight on these particular developments. So first off, I'd have a look at the price history and performance, and this is just to try and get an idea if there's been any underlying developments in the business that have driven analysts to change their price targets, right? So if there was any developments here about the company entering new markets, or potentially like just improvements in sales or earnings reports coming out, these updates here would help give me some context, or reading into these by clicking on them on the company report would give me some context of, oh, okay, maybe this development was what made analysts more bullish and led them to increase their price targets. And also, often when these updates come out, the share price reacts accordingly, right? So the market might have the same sort of expectation. So I'd have a look at the developments that have come out and how the share price has reacted accordingly. Next section I'll have a look at is just below that, and it's the recent news and updates. Here I can get some more context as well, just like the above, to try and see what the underlying business has done that has maybe driven this change in sentiment from analysts. And here you can see there's a whole bunch of updates. The price target increased actually earlier in October, and then it increased again more recently, which is what we're seeing now. But we can see here the EPS exceeded analyst expectations back in end of January, and it looks like that is very related to why the analysts actually increased their price targets. And a few other developments as well, like the dividend will be increased. That happened on January 24th, and that kind of news can lead these analysts to be more optimistic on the stock. I'd also have a look at the valuation section, and this would just give me some context around, okay, let's have a look at the analyst price target and the current price that it's trading at, and how this compares to Simply Wall Street's estimate of fair value. Now, one important thing to clarify is there's actually a difference between fair value and price targets. So fair value is what a business is estimated to be worth right now, and it's based off what future cash flows it can be expected to generate over its remaining life, discounted back to today's present value. However, a price target is typically what analysts expect a stock to be trading at in the next 6 to 12 months, and that is based off what they think the company could earn in the next 6 to 12 months. Like, they might say, what do they think earnings per share is going to be in a year's time, and then they apply like a appropriate PE multiple to that number, and that's how they get a price target for the next 12 months. So there's a difference between those two figures, and that is it. Like, the fair value estimate is the remaining value of the business based on like its future cash flows, whereas a price target is more of a short-term estimate of what it could or should be trading at based on their estimate. And so interestingly for this business, we can see it's currently trading about $29, and analysts estimate that in the next 6 to 12 months, depending on their time frames, it should be worth around $33 based on their estimates. And the Simply Wall Street estimate of fair value says it's worth just under $49. And so that's obviously much more longer term based on all the future cash flows it's expected to generate, discounted back to today's present value. So if I want to get more insight into how it actually generates that fair value estimate, I can click the View Data section in this valuation part of the report and go and look at the model and see what sort of growth assumptions are in there, what discount rates are, and basically make my own just judgment decisions. So if I know the stock well enough and I've done my own sort of model, I can disagree, right? This isn't a buy or sell recommendation. It's merely just a model showing us what a fair value estimate could be. And so I may have different growth rates that I think are reasonable or different discount rates that I think are reasonable. And so jump to my own conclusions about what I think the actual fair value is of the business right now. The next section I have a look at is the forecasts for like future growth. And so we can see here, it's actually interesting, the earnings per share, or the earnings in this case, are actually expected to decline over the next year or two. And it's interesting because they believe, even though earnings are expected to decline, they still believe that the current share price of $28.93 is below what they think it's worth, right, at $33.20. So interestingly, they actually think that despite earnings still declining, there's still some appreciation or possible appreciation left. Now, one thing to note here is that the two analysts who do cover the stock actually haven't provided free cash flow forecasts for the future, right? We can see they stopped here back in about September last year, but they have provided earnings. And again, as we saw, they're declining. So in this particular example, I try and infer to see if there's any sort of conclusion I can bring from this. So if I've been checking this future forecast section regularly and I know what the net income expectations were, and I've noticed that they were changed, I would try and determine if that's what has driven the change in the price target, right? Obviously, I'd have a look at those updates earlier to see if there's any underlying business development that maybe changed that. But the fact that this is about the future and price targets are based on the future, I try and keep an eye on if this has changed or not by checking in on this regularly. If there hasn't really been any change in this particular future forecast section, I'd stick to the valuation section. Now, in the second example, we have an example of analysts decreasing their price target. So we can see here, analysts have decreased their price target to $455 per share. And this is down from $492. The current price target is the average of 15 analysts. So there's way more analysts who are covering the stock than the previous example. The new price target is 36% above the last closing price of $335. So they think there's still a fair bit of appreciation or upside left in this example. The stock is down 15% over the past year, so it hasn't had the best one-year performance. The company is forecast to post earnings per share of $3.29 for the next year compared to $2.49 for last year. So a lot of EPS growth expected over the coming 12 months. So again, the first section I'd have a look at is the price history and performance, just to look for any underlying developments. We can see there's nothing really here over the last couple of months. So it's interesting that maybe this updated guidance was very poor in the sense that we've seen it just decline, or the stock's price declined since late October, and it's only now sort of hovering at around 335. So there's been no underlying business developments, but this is what I would usually check first. The next section would be the recent news and updates, just like the example before. We can see that analysts have been following their price target down for quite a bit now. So 492, 469, 455. Then there's some articles from Seeking Alpha about the company, and then there's another article from Simply Wall Street about the company reinvesting at lower rates of return. These seem to sort of justify why the company might be declining so much. But it seems that because the share price has decreased significantly, analysts still actually believe, or analysts because they have a higher price target, believe that the decline might have been oversold a bit because they still believe there's some upside left. Next, I'd have a look at the valuation section, and here it's quite interesting because as we saw, the analyst price target, which is like a target for the next 6 to 12 months of where they think the stock should be trading at, is about 455, and the stock's currently trading at 335. As we saw, it's declined heaps over the last couple of months, but simply Wall Street's estimate of fair value is for 287 per share. And as we know, fair value is an estimate of what the business is worth right now based on its future estimates of cash flow discounted back to today's present value. So interestingly, it seems like analysts believe that the stock has been oversold over the short term, and they believe it should increase back to about 455 over the next 6 to 12 months. But over the longer term, it seems like this business's prospects aren't that good, according to the model at least, because its fair value estimate is about $287 per share. So that tells us basically that analysts think in the short term there could be a pop again, given it's been they think it's been so oversold, but over the longer term it doesn't it actually is trading a bit above its estimate of fair value. And to get some more context on that, I'd have a look at the forecast future growth section, right? So here this can give me again some context before to just see if there's been any real change in analysts estimates of the future, given that the company has like a huge EPS growth expected from like $2.49 to $3 and something. It may just be a situation where in October last year it was really priced to perfection, right? It was such a high share price, and now it's declined quite a bit. It may just be that back then the sentiment was incredibly high, and just expectations have come down a bit since then, which is why the share price has declined, and analysts believe that the sell-off has been a bit too much, right? So having a look here, it seems like there's still growth expected, but the share market, or the market in general, isn't willing to pay as much for that kind of growth. So to summarize, where would I go to do more due diligence on this price target change update? I'd go to the recent news and updates section just to look for any underlying business developments to see if anything has driven analysts to have the change in their sentiment enough to change their price target. I'd also go to the valuation section just to see how it compares with the current price and simply Wall Street's estimate of fair value. And then lastly, I go to the future growth section just to try and get an insight on if there is actually like growth expected for this company in regards to its earnings and free cash flows and revenues, because ultimately these kind of expectations are what typically drive analyst price target changes, but not always, right? So price target changes could simply come from a higher discount rate. They could be using the same estimates of free cash flow and earnings for the future as before, but they just use a higher discount rate because interest rates are expected to increase, for example. That could be one example. And that drives them to use a lower price target because those future cash flows they're expecting aren't as valuable today as they were before with lower discount rates and interest rates. So those are the sections I would go to have a look at to get more context on that update. I hope this video has been helpful. Thank you so much for watching.